Welcome to the Theo video for Thursday, February 18th, 2016. I'm Jeff White, and the big question on the minds of traders tonight is, has this short-term bounce run its course? Well, today we got a little bit of a pullback. It wasn't much. It was not very intimidating, at least not for the SPX anyway. This index gave up about 9 points on the session, just under 0.5%. So it wasn't bad. Today's downside, very limited by that measure. And, considering that we're off of a 120-point rally here over just the past few days, giving up 9 points, that ain't much. I mean, if you could add 120 and give back 9, you'd take that all day and you'd be pretty happy. And I suspect that the bulls are feeling tonight like they escaped a little bit with a bit of a psychological win despite today's closing numbers being red. And so, the best case for the bulls right now is just a matter of holding on to as much of these recent gains as possible. And, as it's said in trading, your first rule is don't lose money. The second rule, by the way, is don't forget rule number 1. But, the first rule is not to lose money. That's kind of the MO of the bulls here, which just kind of sums up the day, which is, a little bit of downside, no meltdown, no tanking, none of that. That's all, it's all good. So, mind you, it's a one day at a time kind of environment right now. So we've been in pretty fast-moving markets in both directions here. And so, we're only talking about today's bar here. But overall, the bulls really handled themselves quite well, all things considered. Looking here at the NASDAQ, though, it wasn't quite as fortunate, down about 1% on the session. And, the story was a little bit different for that reason. So, it did see a minor gap here to the upside today, which quickly filled. And that's, the fourth straight upside gap that we've seen here in the composite, and the first so far to get filled. Now we've got some other ones in terms of downside gaps that remain unfilled. The first one being back here to Tuesday's close. That's at 44.35 right here. So a little bit more room, but for the NASDAQ, it really was a matter of a lack of leadership out there. So if you turn to some of the big names out there, like an Apple, with the NASDAQ, just keep in mind it was down 1%. Apple was down 1.9%. So even failed this little short-term breakout attempt that we saw take place in yesterday's session. Amazon, very similar, down 1.7%. So also kind of lagging the index. Facebook is another heavyweight here for the NASDAQ, down 1.6% and change. So, plenty of underperformance in some of these bigger names. Google down right about 2% on the day. And then Netflix, came under a little bit more pressure here than the others, even down about 4.5%. So, lots of, weakness here in some of the big names here for the NASDAQ, which of course did not help the case at all. Elsewhere though, attention today really went toward gold and toward bonds. And so, both of those look to have kind of completed some short-term pullbacks here, and we saw a pretty significant return of strength today. So we talked a couple nights ago here about the unlikelihood of momentum traders walking away from these markets, and the fact is it ain't happening, not anytime soon. There's just too much activity out there right now, especially today on what was considered a pretty quiet day in stocks. I mean, hey, momentum traders, they got to get active somewhere, right? So if we take a little bit of a closer look here at the bonds, for example, we've been watching this rising support here that goes all the way back to the first of the year. And, we've at times seen price get a little bit further away from that trend line, and then it quickly pulls right back toward it and continues to hug it, and then it's able to accelerate a little bit more and then kind of rest. And so, this has been a common theme here in recent weeks, but we've seen bonds really get extended last week, getting up here almost to 171. And therefore, a considerable distance from this uptrend line. Well, all of a sudden, the pullback kicked in, saw a multi-day decline right back into that same area here of this trend line. And what do you know? Right on time, the bounce has arrived. So, that's notable. And, if you take a look here at gold, it's been kind of all over the place here, but huge move here to the upside to 1263.90. Very sharp little 2-day pullback here into the low from Tuesday at 1191.5, and now big return of strength today with gold futures up 20 points, and so it's kind of the return of strength here after a very short-term pullback. So if you're looking to trade anything, whether it's gold futures, whether it's the mini gold futures, the YG, whether it's the gold ETF, which would be GLD, or any gold related name, or whether you're looking to trade bonds like ZB, or even bond related product like TLT, whatever it is that you're trading, anything along these lines, you've just got to expect a really bumpy ride right now, because bonds and gold, they're making momentum-based moves. That's kind of what this type of look has been here, with these parabolic moves and the subsequent pullbacks, and then all of a sudden the snapback type of strength that we saw today. So that is to say that this is a pretty emotional trade in all of these products right now. We've just seen them go both ways very rapidly in recent days. And so the action is not smooth, and therefore these are really stick and move type of environments. So do not expect to put on, a decent sized position in any of these type of products or any of these markets, and expect to be able to just sit with it, because what it's more likely to induce is some nausea for you. So, the action really has been pretty messy here in recent days. It's been two-sided. It's been somewhat extreme in both cases in terms of upside, and then, of course, subsequent pullback type price action. And that may very well continue to be the case in the days ahead. So, if you're looking to venture into either gold or bonds or related products, the way I see it, you've got two choices here. First, you can scalp, okay? You can maintain some size that way, but only because you're going with really an abbreviated holding period. I mean, so you got to drill down to the intraday chart and watch very closely, right? And just kind of continue to keep a close eye on the intraday price action and see how things are shaping up. You got to just continue to watch that very closely. And what you're looking for here is a shorter time period for your trades. You're just looking to grab some smaller moves, and you're aiming to do it a little bit more frequently. So you got to kind of keep one finger on the trigger at all times to bail out, because these things, they have proven over and over in recent days that they can and will most likely turn on a dime when you least expect it. So watch it very closely if you're trading in any size at all. Your second choice, though, really for participating in bonds or in gold or related products is to look for a little bit bigger move, but to stay extremely small as possible. In fast markets like we're in right now, you can very quickly find yourself too big in a trade. Even getting a favorable move, a move in your direction, if you're too big, you just can't tend to stay with it, and what you'll end up doing is cutting the legs out from under it. And so that winner cannot possibly run. I mean, that's kind of a phrase that lots of traders throw around, let your winners run. Well, I mean, even if that were your aim, you can't do it when you're overreacting to the moment by moment price action. So get really small. It's going to enable you to kind of aim for the bigger types of moves that have been so common here in recent days that are taking place in these products. Plus, it's going to help you stay more objective along the way, because you're not overreacting to each and every tick along the way and riding that emotional roller coaster that comes with trading too big. So, look, scalp or get really small. I mean, those really are your two choices. Lastly, back here to the S&P. Tonight being a Thursday, that means, of course, tomorrow is Friday, and we are still on this streak of big Fridays, okay? So last week on Thursday, we saw this turn off the low of 1810. We got a big day on Friday, and we've seen a number of them here going back into, throughout January. And so expectations for that reason could again carry some weight into tomorrow's session. And I'm going to keep discussing it until it changes. But essentially, tomorrow in the early going, especially if we start to pick a direction, then the expectation for that big move on another Friday could quite easily lead to another Friday trend day. So be alert for that. And if we do start to pick a good direction, be real careful trying to fade it, because the last few Fridays have produced some intraday trends that can really bring the pain train to you if you want to jump out in front of it, all right? Thanks a lot, everyone, for watching. I hope that you can join us tomorrow in the Theo chat room tomorrow, and we'll wrap up this holiday shortened trading week together. Have a great night.